This problem provides us with the partial trial balance for Greenstar Corporation as of December 31st, 2018. They also tell us that there's 130,000 shares of common stock that were outstanding throughout the entire year. They want us to prepare a single step income statement and then prepare a multi step income statement using the information that we have above. Let's start with the single step income statement. Remember that a single step income statement has essentially one step. It's revenues and gains minus expenses and losses. We're going to start with the header because we'd include that either way. So regardless of the statement, we're preparing multi or single. So we have Greenstar Corporation. The financial statement we're preparing is the income statement. The date is for December 31st, 2018, and it's going to be through the period. So we'll say for the year end 12/31/18. All right, now doing the single step income statement, we're going to have one grouping for revenues and gains. And the revenues and gains that they give us are right up here. So we have sales revenue, interest revenue, and a gain on the sale of investment, which I'm just going to abbreviate gain right now. All right, so we have 1.2 million. We have 31,000. And we have 51,000. We'll now go on to our expenses and losses. Before we do, let's go ahead and subtotal our revenues and gains. So we'll say total revenues and gains. This gives us 1282. We'll now list out all of our expenses and losses apart from income tax expense. Because remember, even in the single step income statement, we still report income tax expense separately so we can do a comparison across companies. So we have cost of goods sold. We have selling expenses. We have general and administrative expenses. And we have interest expense. And since we're doing the single step income statement, we can just group all of those expenses together. So we have 700,000, 165, and 76, and 41,000. We're going to add all of these up to get our total expenses and losses. Which are 982. We're then going to go ahead and take income before tax as a subtotal. And this is going to be the combination of revenues and gains minus our expenses and losses. That's going to give us a total of 300,000. And then we're going to take out tax expense. So we'll subtract tax expense, which is 131,000. And again, I'm pulling this information from up here. So in case it's not clear, here's all my expenses right here. I just pulled tax expense from right here. Okay. So this gives us our net income figure. This is a subtraction of 169,000. And that'll get a double underline because it's a final calculation. So now what we want to do is calculate our basic earnings per share. So I highlighted this in the previous video, and we'll talk about it more as the chapter progresses. But basic earnings per share is calculated by taking net income minus preferred stock dividends and divided by your weighted average number of common stock shares outstanding. They give us common stock shares outstanding here. Oops. Of 130,000 throughout the year. So our net income calculation was 169. We aren't told anything about preferred stock dividends, so that's 0. And then we're going to divide by the 130,000 shares that are outstanding. This gives us basic earnings per share of 1.3. We'll go ahead and report that down here of 1.3. Okay, now let's go on to requirement number 2, which is to do the same thing, but instead we're going to do a multi-step income statement. Okay, I erased everything apart from the header and the calculation for basic earnings per share because those are going to be the same. Now we're just sort of reformatting the financial statement. So when doing the multi-step income statement, remember how we have these intermediate subtotals. We're going to start with sales revenue, and then we're going to subtract out cost of goods sold, and this is going to provide for us our first subtotal of gross profit. That's the markup of the inventory or the goods you're selling above what the cost is to acquire them or to make them. So the amount that we have for sales revenue is 1.2 million. We'll take out cost of goods sold of 700,000. This produces for us 500,000 of gross profit. We'll next take out operating expenses. Our operating expenses that were provided are selling, and then we also have general and administrative. Often these are grouped together. Sometimes you might hear them referred to as SG&A, selling, general, and administrative expenses. These are all going to be considered operating expenses, part of your core operations of business. So we have 165,000 and 76,000. This gives us our total amount of operating expenses of 241,000. This is going to get taken from this gross profit piece right here to get for us our operating income. So this is the income from our core operations that we're anticipating for future prediction purposes, right? So that's why we're separating this information. Remember, this is historical information that we're compiling here, but we're using this with a predictive value focus. So what can we learn from this historical information that helps us predict future cash flows? And so by indicating what operating income is, we are telling the user the financial statements, here are our results from our core operations. And so this is 259,000. We'll then go to other income. And we could also have other expense in here. So we'll call it other income and expense. Included in here, we'll have our interest revenue. Interest, expense, and revenue is classified as that non-operating piece, that other income piece. Gain on sale of investment is also considered other income here. This is from peripheral or incidental transactions. And like I just mentioned, interest expense as well will be classified here. So we'll list these out. We've got 31,000. We've got 51,000. And we've got 41,000. Again, I'm pulling that information just from right up here. So that's where I'm taking that. So now we have our total other income. So we'll sum these guys up. We get a total of 41,000 We're going to add this to our operating income that we had right up here of 259,000, and this produces for us income before taxes of 300,000. Again, that's this piece right here and this piece right here. Okay, we're now going to take out tax expense. We're almost done here. So say tax expense. And the amount that we have for tax expense, again, it's given to us at the bottom right up here, is 131,000. And this produces for us a net income of 169,000. Give it a double underline because it's a final calculation. And we'll include in here our BEPS. We don't have to calculate this again. We did it last requirement. It's still going to be 1.3 because our net income doesn't change. Regardless of the format that we use, our net income itself is still going to be the same.